The rally, CNBC's contributor Peter Boockvar is behind that call. He's the chief investment officer at One Point BFG Wealth Partners. Peter, great to have you with us. Read your note this morning, as I normally do, and you highlighted some comments from Conagra. So there's both the trade related to Conagra, which you have, but also the commentary that you pulled out of the conference call. And I want to start off with the commentary and what it tells us about the consumer, because management sounded very downbeat on consumer sentiment, on the ability of households to deal with rising costs. And it also raised its cost estimates in terms of tariff exposure and raw material exposure.
Yeah, and this has been a multi-quarter, even almost going back to 2024 about this. They refer to a barbell economy, and something we've heard time and time again from a variety of different companies, where that lower income consumer is enabling value-seeking behavior. And then on the other side of the barbell, of course, is the upper income spender, where the cost of living is not an issue. And because Conagra caters to that lower income consumer via their frozen food business, their snacks business, they've been challenged on top of a 7+% increase in costs. About half of that is rising prices of certain commodities that they rely on, like turkey and beef and pork, and then the rest being tariffs with respect to packaging, steel and aluminum, that negatively impacts them. But if you take this further, because they're frozen foods, take a frozen meal that you would find at a supermarket. If you can get a meal for $5-6, that's going to become more enticing. So actually, their frozen food business is growing. And on the snack business, interestingly enough, snacks are considered a discretionary item right now. But one of the items of snacks that they're doing well in is beef jerkies, their Slim Jim brand, which they call their meat snacks. And that actually rose 4% in the quarter. But very much a mixed bag, for sure, in terms of business. But these stocks have gotten so beaten up, so destroyed across the entire consumer products and food business because of all that commodity pressure, because of the volume pressure. But the stocks are so cheap with very generous dividend yields that we've been buying them, and I find them very attractive in a highly valued market.
Right. So staples look good, look poised for a turnaround. But in terms of what I coined this off of your note, the Slim Jim indicator, Peter, I mean, what this is telling us about how, the difficult times that the consumer's facing. I mean, they're projecting that these sort of value-oriented choices are going to persist for the rest of the year. So what does that tell you about the strength of the consumer, the strength of the economy?
Well, if you listen to the Michigan Consumer Confidence number, if you own stocks, you're doing fine. If you don't, you are really stressed. And a lot of Conagra's customers don't own stocks. They're lower income consumers living paycheck to paycheck. But they do provide a lot of value to that consumer. Again, if you can buy a meal for $6, that's attractive. If you can buy a Slim Jim for $1.50 and get your daily protein, that's really attractive. So they're trying to cater more to that value customer. And they actually said if the economy was better, if that lower income consumer was healthier, they would provide more premium type products. But because they're not, they know they really have to hone in and get that value seeking customer.